Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hi everyone, my name's Louise Dean, partner in the medical team, and I'm joined by one of our managers, Jamie Butcher, and we are going to be discussing how you can maximise expense claims as a GP. So Jamie, welcome. Thanks for joining me.
Thank you for having me.
So we're doing this podcast off the back of a recent lunch and learn that we put on with our GPs, and we thought because everyone can't always attend live, we thought it'd just be useful to record something so they've got something to kind of look back over and reference. So before we kind of get into the detail of what can and can't be claimed for expenses, do you just want to give us a quick recap, a quick reminder about what is and isn't subject to tax?
Definitely. So what is subject to income tax? So most people will know that employment income is subject to income tax. Self-employment and partnership income is also subject to income tax. Other forms of income subject to income tax are pensions, interest on savings, investment income such as dividends, trust income, some state benefits such as job seekers allowance, widow's pension, the state pension, and foreign income if you are UK resident. What's not subject to income tax is some state benefits, ISAs, rent a room up to $7,500 per annum, premium bonds, tax credits, and gambling winnings.
So I think you mentioned about state pensions, and I think quite a common misconception is maybe that they're not subject to tax, but you have said that they are. But they don't have tax deducted at source, do they? So how does it work from a tax perspective with the state pension, perhaps if you have another private pension or another job?
Yeah, so the Department of Work and Pensions can't actually deduct tax from your state pension. So what they normally do is they let HMRC know what your state pension is, and HMRC will adjust your PAYE code that is applied to sort of another pension or your employment income if you have employment income alongside, and they will collect the tax on your state pension via that employment or pension.
Excellent. So it's really about checking the tax code and making sure that that is correct. Probably also useful to do a little top tip about tax codes generally. So particularly if they've got two employments, maybe, what would you sort of say to someone in that situation?
So if someone has two employments or an employment and a pension, for instance, it's just making sure that you only have one personal allowance granted to you. So everyone is entitled to a personal allowance. This is the amount that everyone can earn tax-free in a tax year, and that's $12,570 at the moment. However, some employers will automatically apply this to both employments or pension and employment just because of a lack of understanding. So you just need to make sure that it's only one is applied to one employment and the other one has a completely different tax code, normally a D0 or a D1. It does depend on your income levels. So D0, for instance, is all taxed at 40%, a D1 is 45%. There is also a BR tax code, which is all taxed at 20%. So you just need to make sure that you're not getting too much tax relief if the personal allowance is applied to both forms of income.
That's when you get the nasty brown envelopes that land and say, you owe us X amount of money. And I think for sort of our listeners, maybe in the GP world, this can happen quite a lot in training, can't it? When they're on kind of rotations around maybe different hospital trusts and moving from different payroll trusts.
Yes, we definitely see this a lot with GP trainees where they sort of finish one rotation, then they go on to another one. Normally it's because they don't get issued a P45 when they leave an employment and they don't give that to their new employer. So the way the tax system works or the payroll system works is that you should notify them of what you've earned already in the tax year and what tax is already collected. Otherwise, the system will assume you've not earned anything in the tax year to date, and they will apply your personal allowance again, and therefore say you get too much tax relief, and at the end of the tax year, HMRC reconcile everything, and it turns out you've underpaid because you've had too much tax relief in year.
Yeah, and unfortunately, they're not often wrong, are they, when you
No.
get those demands? But it's just understanding about it. And they can always reach out to us and we can sort of help guide them through. Thank you. I think that's just a really useful kind of recap and oversight. So let's kind of get into the detail then and talk through some of the types of expenses that can be claimed and perhaps where we've got some of those grey areas.
So yeah, definitely. One of the ones that does have a lot of grey area on is use of home. So use of home is normally a flat rate claim, which you can claim, which covers utilities. So this is for light and heat, gas, electricity, that type of thing. And it's a flat rate claim based on the average number of hours you work from home each month. So it's sort of 0 to 25, there's no claim, 25 to 50 hours per month, and then 50 to 100 and 100 plus. So it's not a big amount. So it's sort of 10, 18 and 26 pounds a month, but every little helps on this. On top of that, you can then claim a proportion of your mortgage interest or your rent, council tax, for instance, but you do have to be careful with the claims. It has to be proportionate to the use of your home, so the hours that you've worked from home, and then normally your square usage of the house or rooms in your house, for instance. You just have to be careful with saying this room is solely for business use, because it can impact on your your rates and your capital gains if you ever come to sell your house and it's your main residence.
Okay. And this is really only for self-employed individuals, isn't it? We're not really talking about salaried GPs or salaried employees here.
No, this is for those that are self-employed, so self-employed locums or those that are a partner in a partnership, for instance. For those that are employed, there is a £6 a week you can claim, but again, there are conditions that you have to meet to be able to claim this, and most salary GPs won't meet those conditions.
Yeah, I think effectively you have to be forced to work from home. You've got no office, nowhere that you can go, not that you just choose and your employer gives you flexible working, for instance.
Yeah, if it's voluntary working from home, then you can't claim anything. It has to be that it's in your contract and your employer is saying you work from home and say there's no place for you to go to work from.
Yeah, good. Okay, so we've covered off use of home. What's next?
So there are things like your subscriptions, MDU, MPS, BMA, RCGP. There's quite a few of them. There is a list 3, which HMRC call it, which is a whole list of all the professional subscriptions you are allowed to claim against your employment income. So employment expenses are a bit more restrictive than those that are self-employed. So for those that are self-employed, if you've got some international ones that maybe aren't on your list 3, then you can claim against your self-employed income. So you just have to be careful on the differences on those. And if you're unsure, you can just check the list. It's all in alphabetical order, so hopefully quite easy to use. Other expenses are telephone and internet. Again, these are subject to business use. So if, for instance, you use your mobile phone to phone patients or to book your locums, for instance, then you can claim a business use of that. So if you say you use your phone 50% for business use, you claim 50% of your mobile phone costs. And that's the same for your internet. Now, that can also include time spent doing CPD at home if you have to do that. So it's the usage of your internet for business use and CPD. You can also claim for courses, travel and subsistence to those courses. When we say subsistence, that is sort of food, but normally that's only relevant if you're sort of staying overnight. If it's a sort of day course, then that HMRC would assume that you'd take some food with you, for instance, on that one. So you do have to be careful. So if there are conferences which can last a few days and you'll have to stay in a hotel, and then you can claim for food in that instance, because you can't really take a week's worth of food with you.
Just on courses, there is a slight difference between whether you're employed or whether you're self-employed and what you can claim. Is that right?
Yes, there is. So self-employed, you can claim for any courses that are in relation to your job or help you do your job. So for instance, if you were self-employed and you did a bookkeeping course, although it's not in relation to your trade, it's helping you to do your business and record your accounts better. Therefore, you would be allowed to claim for that course. If, for instance, you were a locum GP and you wanted to do a hairdressing course, for instance, you wouldn't be allowed to claim that because it's completely different to the trade that you are doing. And again, some of this comes into new knowledge and existing knowledge. Updating existing knowledge, you can claim for those courses. If it's completely brand new knowledge that then generates a new income stream, that would be considered a capital cost, and therefore you wouldn't be able to claim it. There is a difference also between self-employed and employed. So with employed sort of salary GPs, where you've finished your training and you're not on a training contract, any courses that are considered CPD aren't allowable. This is because it's preparing you to undertake your duties, not incurred in actually doing your duties. That's what HMRC say. So you can't claim them. If you are on a training contract, though, you can claim all of your course costs and your exam fees still.
And just as a reminder for those who are employed, perhaps on a training contract still, you can go back 4 years to claim these expenses. So if you're listening and you think, oh my God, I haven't claimed anything, you can go back 4 years. It's relatively straightforward. It's just an online form, and every year is on the same form now, isn't it? They've kind of streamlined it much better. Unless your costs in any given year are more than £3,000, £2.5,
2,500.
2.5, close. Yeah, so if they're more than 2,500, then unfortunately you have to do a tax return. But if they're under £2,500 per year, then there's a form, a P87 form that you can do online, and it's all relatively straightforward, isn't it?
And what I will say now is you can download the form online, but you can't actually submit them online anymore. They have to go via post and with supporting evidence.
Oh, I hadn't realised that. Thanks for educating me. There we go. Okay, so we've covered quite a few. What's next?
So computer equipment and consumables. So if you have a printer at home that you're having to print out any notes or anything, then you can claim for that. Laptop, if you're having to use a laptop at home, again, these are subject to business use. If there's any private use of these, you do have to disallow and remove those from your expenses. You can also claim for locum insurance, which is to cover you for, if for instance you were off sick, that will give you a sum of money to then pay for you to hire locums in your place, for instance, and that's assuming it's not already paid for via the practice that you work for. Another expense can be spouse wages, so you do have to be careful with this. So it should be paid, and it should be commensurate with the work that they undertake for you. So, for instance, if you hired a unrelated third party to do the work for you, what would you pay them for the work they did for you? So there does have to be some work done, some admin work, for instance, invoicing, chasing up fees. For instance, if you're doing private work, then say you can pay them a reasonable amount for that. You do have to be careful, though. If it's above a certain amount, you may have to put them on a payroll, and if they've got other income as well, they might have to declare it on a tax return and pay tax on it.
That's, yeah, definitely. And I think the same, you can also sort of do the same with children, can't you, to a degree, depending on how old they are and, working regulations and all that jazz. But it all boils back down to the same principle that they actually have to have done some work for you to earn that money.
With children, I would probably just say not if they were under 18. If they were over 18, I think that's okay.
Fair enough.
So one of the big expenses I've left at the end is motoring costs. So there are two ways that you can claim for these. It's 45p per business mile, and that's for the first 10,000 miles in a tax year. Thereafter, it's 25p. Nice and simple way to claim. However, it is only on your business miles. Now, for those that are employed, the business miles are probably only going to be home visits to patients, for instance. Your travel from your home to the surgery where you work or the hospital where you work is commuting and is considered private use, so you can't claim for those miles at all. travel between sort of, if you work from maybe 2 surgeries, so travel from one surgery to another or a hospital to another hospital, that is allowable. It's just your travel from your home to the surgery isn't allowable. Now, with locums, for instance, or GP partners, if they are having to go to different surgeries or to do home visits, for instance, that's allowable. But if you are locuming and you are doing lots of ad hoc locums at different surgeries, your base of operations is your home, and therefore travel from the home to the surgery where you're locuming is allowable, and that's considered business mileage. If, however, you are locuming sort of long term or at the same surgery each week and it's the same sessions, your base of operations becomes that surgery, and travel from the home to the surgery is then considered commuting and private. So you do have to be careful, and it can be that for one locum session or one surgery that you work at, that is considered private travel from home to there, but then another one that you do can be considered business travel. So it is on a contract per contract basis that you have to assess that.
One big grey area.
The other way of claiming motor costs is you can claim for the total cost, the capital cost of your car. You can claim capital allowance on this. So your car will depreciate each year. HMRC doesn't like depreciation, so instead they give you tax allowances instead of that. And it's a set amount each year, and it's based on a percentage, either 6 or 18%, and it's based on the CO2 emissions of your car. So again, it's subject to business use. So if you've got private use of the car, then that has to be restricted. So that's based on the capital value of the car. And then on top of that, you can then claim things like your fuel, your total fuel, road tax, insurance, repairs to the car, again, subject to business use. So there is the two ways. Once you've chosen a method, you have to stick to that method for the ownership of the car, or if you change, like if you stop self-employment and maybe start somewhere else, you might be able to change the method at that point. The other thing you need to be aware of is finance. If you finance your car via a hire purchase, you might be able to claim the hire purchase interest as well as an expense, again, subject to business use. So you do have to be careful what finance you get. If you, for instance, have a lease agreement where you're just renting the car, you can claim the rental payments. However, again, that is subject to business use, and it's also subject to a 15% restriction based on the CO2 emissions of your car. If you've got an electric car, there's no restriction there, but say if you've got petrol or diesel, that restriction might apply to you. If you've then got a true hire purchase, where you are paying for the value of the car, and at the end there's not a really big balloon payment, which you do see often nowadays, then you can claim for the hire purchase interest as well, again subject to business use. There is a bit of a grey area around PCPs, because at the end of your contract with the PCP you have this big balloon payment and there's an option to purchase on there. A lot of the time people will hand the car back and just get another one. So actually they treat it as that you don't actually own the car, and that's treated as lease rentals rather than claiming the hire purchase interest on that. If it is a lease rental, you can't obviously claim the capital allowances on the car either. It doesn't get capitalised. So you just have to bear in mind how you finance the car and what you can claim. If it's a bank loan, again, that's perfectly fine. Interest is allowable on that one.
So Jamie, you just sort of touched on electric cars, and you were talking about the claiming of mileage, etc. We get asked quite a lot, if I buy an electric car, can I save tax? Will it save me tax? Will it?
It doesn't necessarily save you tax. However, it is a cash flow advantage for electric cars. So in the year you purchase an electric car, you can claim first year allowances, which is 100% of the cost of the car, subject to business use, and you can claim that against your profits. However, when you sell the car, the amount you sell the car for will come back into charge, and that's subject to tax. So it doesn't really save you tax in the long run. It's more of an advantage. So if you flip it on the other side, if you just bought a car which wasn't electric, you can claim the capital allowances on the cost of the car for each year. And then when you sell the car, again, the cost of the car comes in. If you've overclaimed, you sort of pay a balancing charge. If you've underclaimed, you get a balancing allowance and you can claim a bit more. So over the life of the car, assuming your business use of the car remains stable and the tax rates don't change, there is no tax saving. It is just a cash flow advantage in the first year you buy an electric car. Now, to claim first year allowances, you do have to have a brand new car, and it does have to be fully owned. So you can do it if it's on a hire purchase, but if you're leasing the car, for instance, and it's a rental agreement, you can't claim it on that one, and you do have to be careful on some PCPs as well, because you don't actually own the car. So you just have to be careful on that one.
I think with anything around taxes, it's not spending the money to save the tax, is it? A lot of the times people are like, how can I save my tax? Shall I buy this? Shall I do that? And it's like, well, if you're looking to buy a new car, then there may be more tax efficient cars to buy than others, or there may be more tax efficient ways to spend your money than others. But buying a car to save tax is not the right way to view it. They're saying, letting the tax tail wag the dog or something like that. So I think it's just making the right decisions for something you were going to do, as opposed to making a decision to do something to save tax.
Yeah, definitely. And I would always say, if you're unsure, then speak to your accountant.
Absolutely. Something else we get asked quite a lot is around clothes. I buy this suit. I only wear this suit to work. I only wear this dress to work. I only wear this pair of glasses when I'm at work. So is there anything that they can claim in those type of scenarios?
So clothing can only be claimed if it's a uniform. So HMRC's argument on this is that everyone wears clothes for decency and warmth. You're not going to go to work naked, you're going to be wearing some sort of clothing. Therefore, you can't claim for just general clothing. You can claim, as a full uniform. So it's sort of a tunic, for instance, if you're a nurse or in the dispensary or something like that, that they might require you to work, and something that has the surgery's name on or the hospital name on normally, so it's that you can see it is a uniform. You can also claim for scrubs, because you are really only going to be wearing them to work. You don't really just pop down to the shops in those, so you can claim for those as well. You can't claim for laundering either. You can claim for laundering of your uniform if you can work out a realistic costs that it costs you to do that. However, you can't just claim for sending your suit to get dry cleaned and stuff like that. So you can't claim for those. Glasses is different, however. So if you only wear your glasses for work because you have to use a computer, for instance, then you can claim for your glasses if you're self-employed.
Good to know. Are there any other top tips that we haven't yet covered off?
I think I've got most of the common ones included. I don't see many others. I mean, there's stuff like there's books and journals that we see go through, little things like that can be claimed. We also have stuff which I haven't sort of mentioned. It's like if you are working for a home and, for instance, you have bought a desk or a chair, for instance, for you to do that, then you can claim a business use percentage of that as well. So there are other little things to claim, but we've covered the big ones.
Yeah, and I think you may have said it earlier. If you're ever not sure, just ask us. And I think in most scenarios, people aren't, other than maybe cars, buying things to get the tax relief. They tend to be buying them because they need to use them day to day in their business, which tends to mean you can claim for it. But I think it's just asking for clarification if anyone's not sure, and we'll soon say yay or nay, effectively.
Yeah, definitely. So if you're unsure, just pop us an email, give us a call. We'll give you an answer to whether you can claim it or not.
Excellent. Well, thank you, Jamie. I think that will probably wrap up everything that we wanted to talk about today. If you do have any questions, as Jamie said, please do reach out, get in touch. All the information can be found in our show notes.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.